Hello and welcome to Beat the Street on this Tuesday, the 31st of October, giving you all the tradable news and data you need to know ahead of the Wall Street Open in 1 hour's time. Let's take a look at the headlines as we continue to monitor what's happening with the US dollar ahead of the Fed rate decision. Is testing support at the 150 level. Eyes remain very much on what's happening with US interest rates. Outside of that, it's all about earnings, and we've got numbers out today from Pfizer and also Caterpillar. Big drop in sales for Pfizer year on year, all about the COVID vaccine. And so far as Caterpillar is concerned, actually pretty good numbers. But the problem is there's a pipeline that appears to be drying up. Now, let's take a look at what all this means for the start of today's trade. I want to show you this chart first of all. This is the volatility markets showing the second day in a row of relatively steep declines, not too far away now from the 200-day moving average technically, and also the MACD is beginning to turn over. I'm wondering whether perhaps maybe this upward trend is actually still in place, but this is just a retracement, people looking for a better price to go long volatility, which would then be short risk. But the thing is today is that we are long risk. So we're short on volatility. Now, the shape of the candles to me show that there are plenty of sellers in this market, but nonetheless, the buyers at the moment are pushing this up, and we are seeing a stronger start to the trading day in 1 hour's time. The S&P 500, relatively speaking, I think in a slightly better corner and at 41.75, bouncing off this 4100 level that we saw on Friday last week. A little bit more convincing, but again, I think this is possibly just looking for a better price to go short. In the long term, you can see, for me, certainly from a technical point of view, this market appears to be rolling over. And I think it's just a question of finding a break of this 4103 to take us on then down to levels not seen since May this year at 40.46, which would then open the door potentially for a further drop all the way down to 3,800. But that's not today. Today, we're seeing money going in mainly to technology stocks. In fact, I can tell you at the moment, we are quite a bit better off than we were at the close last night in the cash session on the NASDAQ. This is the NASDAQ Tech 100, currently trading up 0.2% on the 24-hour markets. And we saw a gain yesterday on the markets already. So I think looking at, certainly at the moment at least, to something that could well deliver a little bit more in terms of some of the upside. Let's take a look at what's happening with the dollar, because this is the other area of the market. And I think really it's all about what's going to happen tomorrow with the Fed. I've got the dollar basket on here. Now, I've put Andrew's pitch forecast, talking about this last week when we were discussing where we go with the dollar. And this is quite an interesting technical setup, because the long handle of the pitchfork took us from the lows that we had back on the 18th of July, and you can see it surfing this all the way up to the break that we had on the 9th of October, which is when we started to get interested in this particular setup here. Now, you can see there has been a little bit of a retracement down to this line of support here. Then we're into the blue, this light blue area here, which is the new channel. And we're testing for a second time in the last couple of weeks this lower channel marker here, which also coincides with this area of 105.51. Which is the line of support there to watch out for. This has been of interest, you can see as well here, back on the 8th of March. So technically, this is quite an important level to watch out for. I'm certainly watching this as a technical analyst. And then if you get a break on there, you do have some support a little bit lower on down at 104.87. But to be honest, then there's not an awful lot taking us all the way then down to the 102.56 level, which coincides with the 200-day moving average. But for me, one of the really interesting things that's going on in the foreign exchange markets is what's happening with Japan. As widely expected, the BOJ maintained its 0.1% target rate for short-term interest rates, and that for the 10-year government bond yield around 1.0 flat percent set under the yield curve control. But the Bank of Japan has redefined 1% as a loose upper bound rather than a rigid cap. Now, let's go back to the chart, because this shows to me that what this is doing, it is actually starting to tighten the markets. When you see yields rise, it effectively tightens policy. It doesn't do it an awful lot in terms of the flat to 1%, but nonetheless, it is having that effect. And look at what's happening here. We've got this Marubozu candle here for the dollar against the Japanese yen. This is the dollar moving up against that weaker Japanese yen. And one, you might ask, why, when you get a tightening, do you get money moving out of that currency? Well, the blatant fact is that you're getting more money for your dollar. And at the moment, at least now, we just have a trade which has now taken us there to levels not seen since the 21st of October 2022. And that blue circle there was when the Japanese authorities got really interested in this and then started buying the Japanese yen. Now, we haven't heard any motivation for doing that. All they've done is firing a warning shot across the bows to say, look, we are ready to move on interest rates as and when. There's some speculation it could well be towards the back end of this year. Outside of this, as I said, it's really all about the dollar. I want to show you what's happening with the euro dollar because this rising line of support continues to hold, broadly speaking, and we're just trying to make a break above the 106.35 level, which the highs we had back on the 11th of October and earlier on this year on the 31st of May acted as a line of support. But we have been above that the last couple of weeks or so. It all depends, I think, now on what happens with the Fed interest rate decision tomorrow. We've got the Case-Shiller Home Price Index today. We've got the Red Book year on year. We've got the Chicago PMI data out later on today. But none of this is of a real interest when you've got the Fed meeting. But we'll be interested to see just what the Fed wants to do with its interest rates. At the moment, at least, we do have a long position for euro trading against the US dollar. Now, the effect of all this as well is having some effect on the price of gold. Now, we got the dollar down today, as we've just seen, and this gives a little bit of a fillip to anything that is priced in dollars. But gold particularly responds well to this. But in the current environment, the febrile environment, or the fragile environment, I should say, for geopolitics, has pushed this price of gold up. Now, in the last 2 or 3 days, we have passed and indeed seen a candle close beyond the 2,000. We haven't actually had a full candle above that at the moment. So there's a little bit of a hesitation. Do you remember me talking about this little pattern here, this pennant pattern? Well, I think we're getting another one. We're getting another pennant here. It's a very short candle pennant, but I think this potentially, if we see another day of some hesitation, we could then, it's a continuation pattern. So I drew this dotted line up here and then gave a dotted line. So that pattern is now completed in profit. But I think there's a little pennant going on here as well. You get 3 candles in a row of no move, and I think we're being capped out by the 2,000 level. I think then you're on the way up, possibly to the 2020 level, which will then take us back up to levels there, not seen since the 16th of May this year. So I think potentially, technically, there is upside to go on the price of gold. And of course, as we hear more and more about what's happening in terms of some of what's going on in the oil markets because of the geopolitical environment, I think oil is another one, a really interesting area to watch. Earlier today, we saw the World Bank come out and say any escalation in what's going on in Gaza and the Middle East, excuse me, especially if we see Iran come in, if Hezbollah starts to become involved, the World Bank is then talking about a price target of $150 the barrel for the price of oil. Look, there's a lot to go before we even get to that level. And there's a lot of political interested parties calling for a ceasefire. It doesn't look like that's what Israel wants to do at the moment because it wants to flatten Hamas. But at the moment, at least, oil is finding some sort of support. Now, this 76.4% retracement on this move here. So let's take a look at what's happening in the background. Let's take a look now at what's happening in the foreground and take a look at what's going on in some of these stocks to watch today, because there are several. And I think IG on the platform gives us a steer as to where we could well see some of these stocks come through. Let's take a look at Pfizer first of all. Third quarter earnings, adjusted loss of 17 cents a share. We've been looking for a loss of 34 cents. So that is a little bit better than had been expected. Revenue coming in at 13.25 billion. We've been looking for 13.5 billion. So that's a little bit of a negative to the overall figures. We had been expecting a big loss in revenue against 2022 because of the big COVID vaccine sales that we saw last year. Let me show you what's been happening with Pfizer's shares. This vertical dotted line here is the start of the year, and you can see all the way down to the lows here, 42.75% down. We're just off the lows recently, and in fact in today's session we are currently down 0.75% on yesterday's close. So we are expecting a slightly lower start to the trading day for Pfizer. So that really doesn't help us give anything in terms of any particular big moves. But let's take a look at what's happening with Caterpillar. Another company that's reported before the market. It's another stock that trades all sessions on the IG platform. And these are third quarter earnings as well. Adjusted EPS, $5.52. Absolutely dominating any estimates out there. $4.47 we were looking for as a consensus. We got $16.8 billion in revenue. 16.56 had been the sort of figure we'd be looking at according to the Bloomberg estimates. But look at what's happening on shares at the moment. Again, all sessions on the IG platform, you can quite clearly see this drop here that we've got, indicating a lower start. We're down almost 5%. Now, one has to ask why, when the company has been benefiting from infrastructure spending and a move into clean energy, and the stock is reporting a very good number. Why are we down so much? The analysts tell me it's all about pipeline, and the fact the pipeline is now not as robust as it was. They're eating into the pipeline in terms of order book, and the order book is not being filled at the other end. Now that is potentially long-term impact, and of course markets like the price in the long term. And here we are now, well below the 200-day moving average. At the moment, at least, it's looking as though this stock is going to open at $230.17. Yesterday we closed at $242. So you can see we're looking for a lower start to that, which is that move at the moment for Caterpillar. Now, I want to sidestep a little bit and talk to you a little bit about Stellantis. Sales rising 7% in the third quarter. This is a French company. One has to ask why we're interested in a French company when looking at the US markets. Well, because Stellantis is one of the big three Detroit automakers now, because it owns Chrysler. Sales up 7% in the third quarter to 41.5 billion euros against analyst estimates of 43.7 billion. But the company has said the Detroit strikes will cost the group 750 million euros in terms of profits. Now, these are 6-week strikes in the United States over salary increases. It has had an overall negative impact to the group's revenue of around about 3 billion in total, according to the chief financial officer, Natalie Knight. She said in a media call that these strikes would cost Stellantis that 750 million in terms of profitability. But it is the smallest impact amongst all of the major automakers. Just want to show you what's happening in France, just to show you there's a little bit of a rise in the session in today's trade. But let me just quickly work out what this means for the likes of General Motors, which at the moment at least is having a positive day, but look at this, it's fractional compared to everything else. General Motors still has issues with the striking workers, and it's still trying to find a solution to that. Ford is another one. Interesting enough, Ford has come out today on the back of a note from S&P, which says that it's improving its outlook for Ford Motor, but it doesn't seem to have done too much. The company has lost a lot of ground in the last few days. All sessions on the IG platform, that's down 1/3%. Now, that's taking a look at some of the stocks to watch ahead of the open today. And here at IG, we like to talk about an opportunity to trade these markets. And of course, we steer you in the direction of all session stocks. Now, after the US closing bell tonight, Advanced Micro Devices comes through with its third quarter figures. The street expects the chipmaker to post earnings of 68 cents a share on revenues of 5.7 billion in the third quarter. Now, this matches AMD's expectations. Back in August, AMD guided third quarter revenue of 5.7 billion, plus or minus 300 million, and a non-GAAP gross margin of approximately 51%. So, where do we go with this stock? Let's take a look at what's happening, all sessions on the IG platform. As we look at this at the open, a tiny little doji star candle. That indicates to me that we're waiting on news, as indeed is the case. But you can trade this after the close this evening. That stock, at the moment at least, is going to open at 96.35, not too far away from where it went with the cash close last night. So AMD, one of the stocks to watch. Let me just quickly stay on the charts. Just wanted to quickly recap on where we are in terms of some of the moving markets. Just wanted to highlight the fact that we've got all three indices showing a slightly stronger start to the trading day ahead. Things looking good for the S&P 500 at the moment, up at 41.69. But for me, the longer term picture is the fact that this is looking as though it just wants to curl over, and you can see the direction of travel for me at the moment is on the way down, and it's just a question of when it's going to break this 41.03. I'm afraid to have to say that this last 2 days doesn't fill me with any sort of upside enthusiasm technically, and I'm waiting for a break of the 41.0322 to put a short position on with a stop loss just above there to take me then down to a price target of 40.46. That's how things are looking at the moment. For me at the moment, as we're looking towards a slightly stronger start to the beginning of today's session in around about 45 minutes time. Don't forget the Fed tomorrow and those stocks to watch out for after the closing bell tonight, including AMD on earnings.